Sales taxes and value-added tax, VAT, are essential tools for governments to fund public services and infrastructure, each with unique structures and impacts. Sales taxes are applied directly at the point of purchase, making them simple and transparent for consumers. You pay a percentage on the retail price of goods or services, clearly visible on receipts. However, sales taxes can be regressive, meaning lower-income individuals who spend a larger portion of their earnings on taxable items bear a higher relative burden. Different regions may also have varying rates and exemptions, adding complexity for businesses operating in multiple jurisdictions. VAT, in contrast, is more complex but offers certain advantages. It is applied at each stage of the production and distribution process, taxing only the value added at each step, from raw materials to the final product. This multi-stage tax is less obvious to consumers because it's embedded in the price of goods and services rather than separately listed at the point of sale. One of VAT's strengths is its self-enforcing nature. Since businesses can deduct VAT paid on inputs from VAT charged on outputs, they are incentivized to report transactions accurately, reducing tax evasion. However, VAT also has its downsides, including being regressive and placing a heavy administrative burden on small businesses due to complex reporting requirements. As the global economy increasingly moves toward digital platforms and e-commerce, new challenges arise in applying sales taxes and VAT. Determining where tax should be collected, especially for cross-border online sales, is becoming more complicated. Governments are adapting their laws to capture revenue from digital transactions, ensuring that businesses contribute their fair share regardless of physical location. Efforts to simplify tax systems, broaden the tax base, and promote international cooperation will be essential to making consumption taxes more equitable, efficient, and adaptable to the evolving global economy. Both sales taxes and VAT are critical to funding public services, but they require careful management to ensure fairness and efficiency in today's rapidly changing economic landscape. Excise taxes, often applied to goods like tobacco, alcohol, and gasoline, serve a dual purpose, generating revenue and guiding societal behavior. These taxes are not just about raising funds. They are designed to influence consumer choices. For example, taxes on cigarettes and alcohol aim to reduce consumption due to health concerns, such as smoking-related diseases and alcoholism, by making these products more expensive. Taxes on gasoline reflect environmental goals, pushing for reduced carbon emissions and cleaner energy alternatives by making fossil fuels pricier. The benefits of excise taxes are clear. They help reduce the consumption of harmful products and promote public health and environmental responsibility. Countries with high tobacco or alcohol taxes often see lower smoking and drinking rates, along with reduced healthcare costs. Excise taxes can be regressive, hitting lower-income individuals hardest, as they spend a larger portion of their income on taxed goods. This raises concerns about fairness, especially when applied to essentials like fuel, which can impact mobility and access to employment. High excise taxes can also lead to unintended consequences, such as the rise of illicit markets. Consumers may turn to black markets for cheaper, untaxed alternatives, undermining the effectiveness of the tax. Subsidies for healthier options can complement excise taxes, making it easier for consumers to make better choices. The debate over consumption taxes, including sales taxes and value-added tax, VAT, explores the complex intersection of fairness and efficiency in fiscal policy. These taxes are levied on goods and services, encouraging savings and investment by taxing spending rather than income. Proponents argue that this promotes economic growth, but the system's regressive nature raises concerns about fairness. Lower-income households tend to spend a larger portion of their income on necessities, making them bear a heavier tax burden relative to wealthier individuals. Simplifying the system could enhance economic energy and innovation. Balancing efficiency with fairness remains a challenge. Solutions like exempting necessities from consumption taxes or applying higher rates to luxury goods have been proposed to reduce the regressive effects. Beyond national borders, the debate has global implications, influencing trade, competitiveness, and multinational corporations' decisions. With the rise of digital commerce, governments face new challenges in capturing tax revenue from online transactions, requiring innovative approaches to policy and administration. The conversation around consumption taxes ultimately reflects broader societal choices about how to fund public services and distribute economic burdens equitably. Crafting policies that uphold fairness while driving growth demands a careful balance, shaping the kind of society we aim to build. A prosperous, fair, and equitable future for all. The narrative of consumption taxes and their effects on spending, saving, and investment indeed plays a pivotal role in shaping the economy. By taxing consumption rather than income, governments aim to promote savings and investment, which can lead to long-term growth. This approach carries a certain complexity. Consumption taxes like VAT or sales tax increase the cost of goods and services, and this can alter consumer behavior. Wealthier individuals may have the flexibility to absorb these taxes, while lower-income individuals face a heavier burden as more of their income is directed toward essential goods. One question worth considering is whether the potential shift in consumer behavior due to these taxes truly leads to increased savings and investment across all income levels, or if it primarily impacts higher-income individuals. Do you think this balance between promoting savings and ensuring fairness is effectively achieved in most countries? Or does the regressive impact often undermine these goals? Exploring international perspectives on consumption taxes offers a fascinating look at how different countries navigate the balance between raising revenue and promoting economic equity. From the EU's harmonized VAT system to Japan's gradual tax hikes and North America's patchwork of sales and VAT models, these systems reflect diverse economic strategies and social priorities. In the European Union, VAT plays a central role in funding social welfare systems, with countries like Denmark, Sweden, and Hungary imposing some of the highest rates. These nations use VAT to sustain comprehensive public services, reflecting a commitment to collective well-being, even though the higher tax burden can affect consumer behavior. In Asia, Japan's consumption tax increases have been a response to mounting public debt and the costs of an aging population. Singapore's GST is praised for its efficiency, supporting robust public services while maintaining a low overall tax burden, crucial for the city-state's competitive edge. North America's approach differs greatly, with Canada's GST harmonized with provincial sales taxes in some regions. The US, however, lacks a federal VAT, instead relying on state-level sales taxes, leading to a fragmented system that can complicate compliance for businesses. Recent adopters like Saudi Arabia and the UAE have turned to VAT to diversify revenue streams away from oil, marking a shift towards more sustainable fiscal policies. Latin American countries such as Brazil and Mexico face challenges with complexity and compliance. Brazil's multi-level tax system reflects the difficulty of managing consumption taxes in federated structures, while Mexico grapples with tax evasion despite its simpler VAT system. The shared goal is to strike a balance between efficiency and equity. This global journey through consumption taxes reveals how countries are continually adapting their tax systems to meet their economic realities and social goals. The rise of green taxes is shaping tax policies toward sustainability, with governments using consumption taxes to promote eco-friendly choices, such as taxing single-use plastics or incentivizing electric vehicles. This shift reflects growing societal demands for environmental responsibility. At the same time, there is a focus on equity in consumption taxation, with measures like progressive tax rates, exemptions on essentials, and targeted rebates to protect low-income households from the regressive effects of traditional consumption taxes. The digital economy poses unique challenges as governments adapt tax systems to capture revenue from digital services and virtual goods. Ensuring tech giants pay their fair share is essential for fiscal fairness. As these trends unfold, the future of consumption taxes promises opportunities for innovation and efficiency, but also complex challenges in balancing revenue generation, fairness, and economic growth.